now.
Excellent. I really appreciate you having me back here. I think this is like my second or third time, so it's always a good time to meet with David's customers. And this is me, Stephen Cawiezell, right here with the TradersPlane.com, and I really appreciate everyone spending the time to be here with me today. Presentation will take about an hour or so, and I definitely want to be respectful of your time. Now, before we get started, I want to do you the courtesy of letting you know what I'm about to discuss and who I built this for. So as the title suggests, we're going to teach you how to build an income stream from trading. And yes, it literally takes 20 minutes per week once it's in place. Now, I treat trading like a business, and so do the majority of the people I work with. If growing your wealth and not just hitting, but crushing your retirement goals is truly important to you, then I've built this for you. My systems and processes work. In addition, I personally make sure that everyone who works with me knows how to execute them. Bottom line is I make money from this process. My brother, my friends, my students, they earn income with me. So without further ado, please shut off all distractions. In the next 45, 50 minutes or so, I'm going to give you a strategy that serves as the foundation and key earner in my own business, because make no mistake about it, if you're going to be truly successful, we've got to treat trading like a business. So let's get started with one of my favorite quotes from Warren Buffett, the man. Now, Warren Buffett says, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Now, what is he really saying when he says this? What does this quote mean? All this means is I like buying high quality stocks on a pullback. Right? That's all that means. I like buying high quality companies, high quality stocks on a pullback. And, really, I probably make the argument that this was more of a Charles Munger, his business partner, quote. But in the early 70s, the more he worked with Munger convinced him, like, hey, instead of buying mediocre companies that are way down in the dirt, down in the gutter, why don't we buy high quality companies at a fair price, right? Just buying high quality on a pullback. And that's really the basis for everything I'm going to teach you today. That's the system that I'm going to teach you today. We're going to talk about how to buy high quality on a pullback. Now, let's get started. So all the charts that I'm going to be looking at today are Zoom, right? You have Zoom right here. This is a weekly chart. So just keep that in mind. These aren't daily charts. These are weekly charts. Right here, so let's look at this chart before Zoom made its monster move. You have Zoom right here, and it was a momentum stock, like it was coming out hot. Everybody was excited about it. A lot of FOMO, right? A lot of fear of missing out. And then people maybe started buying up here, but a lot of them probably started buying on the pullback. Well, then they kept getting stopped out along the way. At least I hope they were. That means they were using stop losses. They were following a set of rules. Well, I've identified a 4-bar pattern that continues to pop up over and over at very, very ideal times. And this 4-bar pattern that I'm going to walk you through, it was at the absolute bottom of this Zoom chart, right before it went from $60 to almost $600. Now that's a 10 bagger, or at least it's a 9.5 bagger, as Peter Lynch would say. I think we all know, and it's fair to say, that not all stocks are going to catapult, right? They're not going to quadruple or double or triple. Some of them can just be some really, really nice income trades. And we're going to talk about that. We're going to look at some examples. So here's another one. And you have CAR, C-A-R, and again, this is the weekly chart. So a lot of people don't think of Avis Budget car rental company as, something super exciting. It's not a high-flying tech stock, right? It's not a Tesla. It's just a car rental company. But look at this major uptrend. Look at these bars. These bars they're producing some really, really nice trends, really, really nice move at the beginning of 2021. And then towards the summer, it had its first deep pullback, right? Pretty reasonable pullback. But look, this 4-bar pattern right here popped up right at the absolute bottom. You see this reversal bar is what we're going to focus on, but it's really a 4-bar pattern. You enter at the open on Monday, and then this just absolutely took off. So again, most aren't going to be the Zooms of the world, and that's totally fine, even though those will most certainly come if you place enough trades. But we're looking for these nice setups, these high quality setups, buying on a pullback. And I'm going to show you how to do this yourself. Before I really dive deep into system rules and processes and all that fun stuff, I have to talk about trader psychology for a second, because that is incredibly important. That's just as important as system rules and all that stuff. So let's talk about this for a second. I have worked with thousands of traders and had thousands of conversations over the years, and even back to my retirement planning days. And usually what I find is traders, they fall in one of three stages, right? Stage one, stage two, stage three. And stage one is usually for where beginners fall. They're either a beginner, or maybe they are new to a process, or they're new to a system. Either way, there is a new beginner factor right here. Now, what happens when you have some new traders really come in? All right, well, usually they get excited. Maybe if the market's moving, there's going to be some FOMO, easily influenced, quick to pull a trigger, quick to buy something because they want to make as much money as quickly as possible. Well, there's a downside to that, right? The more quick you are to pull the trigger, the more you are to make that money now, you tend to get a little lawless, which means you have no rules. You're just buying and selling discretionary. Well, it never fails. Typically what happens when there's no rules is you're going to get hit with a string of losses. Either the market has to change or something's going to change. You're going to get hit with a string of losses. And then usually what that happens is that knocks you down a peg or two. Okay. So then you move over to stage two. Now in stage two, you're still determined. You got to brush yourself off a little bit, but now you're only semi-confident because you thought all this was going to work over here. So then I've seen so many traders, almost all of them. We've almost all been in this stage two. We go on this quest, right? This never-ending quest of saying, I have to learn everything about every bar, about every indicator, every stock market. You go on this knowledge quest. And a lot of times, if you're lucky on your journey as a trader, you can only spend a couple years in here before you realize that the more you know doesn't necessarily mean that's going to produce consistent income. Now, the problem with this is you end up being jack of all trades, master of none, and it's really just an information overload. I've seen most traders are here for a year or two before they move on. I've seen traders being stuck here for literally 30 years, just constant. I got to know this indicator. I got to know this bar. I got to know this doji, or just whatever the case is. Just, you can really get stuck here. Well, usually what happens when the average person realizes that knowing every indicator is not the key to their success, then they go to stage three. And this is kind of where they really throw their hands up. They're a little lost. There's no confidence because they're not sure. They thought they needed to know everything about the market. That didn't work. So now they're really stuck. They're frustrated, but this can also be a very dangerous place to be. Because you have to, excuse me, because people are really looking for that home run seeker. And I get these emails from time to time from new customers. They might say, hey, Steven, I just came from another service, or I just did some really dumb things with my personal accounts. I just need a double or a triple to get back to break even. Then I'm good. Just give me a double or a triple. As if that's an easy thing to do, right? Just send you a double or a triple and then you'll be on your way. Well, the problem with that is one, that's not an easy thing to do. And two, you have to take above average risk. And what if that trade doesn't work out? You just compounded your issues and problems. So unfortunately, I see this kind of home run syndrome, this home run seeker all the time. Now, after you're in stage three for a while, and then you see maybe another process or maybe another system that you like, the numbers look good. Maybe you're chasing some numbers. And then it starts all over again. Now you're back at stage one. And really, this is a vicious cycle that can go on and on and on. So, I try to get traders to do everything they can to really get traders to break this cycle, because, what I have found is the biggest obstacle in trading for most traders is they have no objective rules-based trade plan. And when I say objective, I mean a 100% rules-based trade plan. Take the emotions out of trading, take the discretion out of trading, and just follow a set of rules, right? A business plan. When you launch a business, you have a set of rules, or at least you should. You have a marketing game plan, you have a marketing budget, you have, your market research, of your competitors. You do all the work, you put it out on a nice business plan. Well, the same should be for a trade plan, because then once you have that written trade plan in place, then all it is just execution. So my big promise to you today, and I understand what I'm about to say, it's going to be a big promise, but I feel confident I'm going to deliver it to you. So I'm going to teach you an objective rules-based trade plan. Objective is the key word. I'm going to give you the money management rules on when to get in, when to get out. We're going to look at some real live trade examples. And I'm going to show you how to trade this whole system in only 20 minutes per week. 20 minutes per week. So if you're looking to day trade, if you're looking to stare at your screen all day as if that's going to make your stock move, this probably isn't for you, right? This is for the person who wants to follow a set of rules, execute their trades, and move on with their day, move on with their week, go fishing, go golfing, go spend time with kids, grandkids, whatever it is that makes you tick, okay? 20 minutes per week. Real quick, I have to make the lawyers happy, so please take a few seconds to read this disclosure. Okay, lawyers are happy. Now, a little bit about me, just so you know who really is on the other end of the screen, right? Who's talking? This is me right here, Stephen Cawiezell. I live in the small working class town of Russellville, Arkansas. I am a former financial advisor turned trader publisher, and I made that switch back in 2013. When I was a financial advisor, I worked in a practice with 60 million assets under management with another advisor. I'm the author of Expert Trading Systems, which is a book you can purchase on Amazon. I'm the head founder and trader of thetradersplan.com. What I'm most proud of, honestly, is I have helped thousands of traders set up a rules-based system. Now, I have a question for you, kind of moment of truth question. How many of you have a rules-based trade plan? How many? And it's not real until it's written down, because we all have ideas of what we want to do. We all have plans of what we want to do in our head. How many of you have a rules-based trade system on paper? Okay, think about it. We'll go through this. Now, what makes this easy? What makes what I'm about to teach you really easy, actually? Well, for one, there's zero fundamental analysis involved. No earnings, no sales, no CEO change, doesn't matter, just price and volume. Okay, just price and volume. That's all we're going to focus on. There are 3 rules that you could literally write it on a Post-it note. If you're sitting at your desk, I challenge you to get a little notepad out. If you have little yellow pads, sticky pads, and get a pen out. And I'm going to give you the rules here in a second, and you can write them down and post it on your computer screen. That way you do not forget. And it's literally only takes 20 minutes per week. And I'm going to show you how to do that as well. So this is a once per week setup. Remember, I talked about this is designed to be a lifestyle trading system. Now, when studying the bottom in stocks, I noticed that there are certain qualities all stocks have before they turn into the winning trades. Now, in order to identify this money-making setup, we must recognize these qualities before they make their big move. Now, I have narrowed down these qualities into a rules-based winning system, and that's what we're about to talk about. Let's look at this from a bird's eye view for just a second. How to set this up. So usually I'll spend 15 minutes Sunday morning, coffee, charts. I love it. Sunday morning, I'll spend 15 minutes going through my scans to find the best setups. And I have a rules-based way to narrow that down. On Monday morning, place their market order. On Monday morning, we place our market order right when the market opens. So we're just buying at the open. 5 minutes total. That might be a little too much. I doubt it takes 5 minutes, but hey, let's round it up. 20 minutes total, rinse and repeat, and just do that every single week, once a week. It's just really, really that simple. So here it is. Here are the 3 rules. I told you you could write it on a Post-it note, and we're going to go through these 3 rules one by one. Now, this is just a classic example of CrowdStrike. Okay, this is a weekly chart. Keep in mind, we're looking at weekly charts, not daily charts. Let's go through these rules one by one. And I want to go through these rules one by one, and I want to really, really explain them to you. I want you to understand them. Not only do I want you to understand the actual rules you could write down, I want you to understand the psychology and really what's going on behind these scenes and what makes this system just work. Rule number 1. we're looking at this reversal bar. So really we're looking at swing low points. Okay. And I'll show you how you can really identify these. There's a lot of them on charts. So the weekly chart must undercut the prior 3 weeks. Now, what does that mean? That means the low, well, you got this reversal bar. You got this bullish reversal bar on the weekly chart. Okay. That means the low point right here must be lower than any point in the previous 3 weeks. 1, 2, 3, check. Okay. Why do I do that? And what's the psychology behind that? Well, how many times have, let's say you bought here and, you're trying to buy on a pullback, you buy here, you place a stop loss right here. This bar comes in and, just picks you off and then reverses and then slingshots in the intended direction, right? Because you're just buying on a pullback. You wanted this to happen, but you got stopped out right before that happened. If you use stop losses, which I hope you do, it's happened to all of us. Sometimes it's the cost of doing business. What if I could sidestep that whipsaw or that shakeout? What if I could buy after all these other people have been picked off? Okay, because now all these people are frustrated. They don't want to have anything to do with the stock. And what happens when you just want to ignore a stock, you want it to go down, it usually reverses and goes in the intended direction. That's a bullish signal. So I want the low to undercut the previous 3 weeks. Now, to be clear, these 3 bars, so this is a 4-bar weekly pattern. These 3 bars do not have to be in sequential order, meaning this one does not have to be lower than this. This one does not have to be lower than this. It could be these 3 bars right here, just in any order they want to be, as long as the reversal bar, which this is not, and I'll explain in a minute, as long as the reversal bar undercuts all 3. Okay, I want to run all the stops. I want to frustrate everybody who had a stop right here, and then I want a bullish signal. That was rule number 1. Rule number 2, the weekly bar, this reversal bar, must finish positive. It's got to close above the previous week's close. Doesn't have to close above the previous week's high. It doesn't have to close above the previous previous 3 weeks high. It just got to close above that 1 week's close. Okay, now why do I do that? Well, I already had a bullish reversal that just shook out a bunch of other traders. Okay, so now I want there to be enough power in this reversal, enough bullishness to give me more of an edge, to let me know the bulls are in charge. And I'll give you a perfect example. This one worked really well. Now, right over here, let's look at this 4-bar pattern. You actually have a reversal. Rule number 1 is fulfilled, right? It undercuts the previous 3 weeks. But look, it does not close above the previous week's close, and the trade failed. It just absolutely failed. And then the next one, the one that fulfilled rule number 2 rules, it worked. So it's very important the bulls are in charge. We do all these little things to give us an edge. And if we do all these little things to give us an edge, easy things, then eventually we're the house. Okay, we want to be the house. So now rule number 3, and this is an important one, ladies and gentlemen, got to have above average volume. Now, this is just a volume histogram, just very easy volume, right? You can do this on any chart, on any platform, doesn't matter. I define above average is I take this 50-day moving average and I plot it right here. Okay, I plot this right here. And if it's above the line, it's above average. If it's below the line, it's not. Now, there's no blue line over here, but that's because it was an IPO and there weren't 50 periods to average just yet. Okay, but you can clearly see that right here, this volume bar is above here. This volume bar is above here. So the more volume, the better. The skyscraper volumes, that's where the pensions, the hedge funds, the mutual funds, that's where the smart money is piling in. Now, as retail traders, that's you and I, we have a huge advantage over the smart money. And we have a huge advantage because we can get in and out in seconds. Usually, unless you're trading $1 million trades, you can get in and out within a second. Now, the smart money cannot. So let's think about this. When you see this kind of reversal bar and it fulfilled rules number 1 and 2, and now we got number 3 to look at. When you see that kind of volume, one of 2 things are happening. Either 1, the institutions are stepping in to support their stock, which means they're buying, gobbling up all the shares right at this price because they don't want it to go any further. Or rule number 2, they are initiating a brand new position, which is even better, honestly, because on average, it takes a mutual fund 3 to 6 months from start to finishing their position. I mean, we have to think about this. They're taking $500 million position sizes, meaningful amounts that probably barely move the needle in some of these, $20 billion portfolios. So they got to buy a big chunk. They can't buy it all in one day because it would move this $60 stock all the way up to 100. They have to buy incrementally. So when we see this kind of volume, it's likely that more buying is coming. So then we could just hop on the bandwagon and ride their coattails all the way up. All right. So rule number 3 is very, very important because not only does rule number 2 show us the bulls in charge, rule number 1 shakes out all the weak holders. And rule number 3 shows us that the institutions are flowing in and we have an advantage over them, a huge advantage. So you got rule number 1, rule number 2, rule number 3, all together. They make for a very, very nice pattern. Very, very nice setup. Like I said, we're buying high quality stocks on a pullback, and then they can slingshot the way as intended. Let's look at some more examples. Now, Washington Federal, I don't even know if I have ever heard of this stock before it popped up on my scanner. So, and that's the beautiful thing. Like this pattern is so abundant. You're going to see it in stocks you've never heard of before, but I'm fine with that because if it pops up on my scanner, it's a high quality stock and it just set up it just had a really nice setup. So let's just look at this for a second. So you have some boring bank stock that, popped, it broke out and it made a nice little move. And then that first pullback, look what happened. It tried to break down. It didn't, it reversed, you enter, it's got that above average volume, you made some money. And then it starts to pull back and it creates another reversal pattern, fulfills all the rules. And maybe you made just a little money on this one before it started to break down. But look at this. Look at the deepest pullback in this whole uptrend. You got 1, 2, and then the deepest one. There is a reversal bar right at the bottom. Enter at the open. And then it tries to break down a little bit, but more support comes in and then it just absolutely takes off. So what's interesting about this is there was a correction back in September and a lot of the tech stocks and some of the growth stocks were getting slammed. You had some banks and energy that were really breaking out. So this can honestly be a leading indicator to show you what industries you should be piling your money into. Because at this point in time, right, when the market was still in correction mode, these stocks were starting to really pop, because we kind of switched over to value mode into financials and energy. I challenge anybody that's listening to go ahead and just pull up a stock on your watch list, go back 2 years, throw up a weekly chart, and you'll see this pattern pop up again and again and again. Just look for the swing low points. And I guarantee you, if you look at a couple of stocks and you're just looking at it, and you see this, I mean, they're just going to start popping off of the screen. All of a sudden, you're going to start noticing it. And you're going to say, I'll be dang, that was a good entry. That was a good entry, right? And the pattern is abundant. And now that you know the pattern, you can 100% be aware of what it can do. So here's another one. Royal Dutch Shell. This is just a mega cap. You would think of it as a stalwart. Nothing exciting going on here, except for during the same time, September of last year, when the market was struggling, this created a reversal pattern. Now, why I like to show this is because this is a different look. It really is. And the reason why it's a different look is because it's not an absolute, the swing low. It's not the lowest point. It honestly doesn't have to be. It can just undercut the previous 3 weeks and above average volume. And then boom, it just absolutely took off when the banks were taking off. It definitely was a sign to put money into banks and energy during this time frame. So it really stood out. Now here's a more aggressive name, CYTK. And again, Just a company I haven't heard of. I mean, there's 10,000 publicly traded companies approximately. It's hard to keep track of them all, but it popped up on my scanner. And it's a great example because look, you kind of got this breakout, this gap up. I don't know what happened here. Something happened here to get the trend started. So you got this high quality stock. It's moving along, gets hit really hard right here, and then just bullishly reverses. All right, enter at the open on Monday, make some money. And then look, it tries to break down. You remember I talked about, failure to fail. So fail to break down here and a bullishly reverse. That equals strength. It failed to fail. It tried to break down sometime during the week. It bullishly reversed. That shows strength. Now, this one actually probably lost money because if you were buying up here, right, at the open, and I'll talk about entries here in a second, it went straight down. You're getting out, right? This one's a winner. This one's a loser. And then you have the mecca of all three. You got a nice reversal, right? Right down here. It's barely above average, but it doesn't have to be huge. Okay, it's barely above average. And then you enter at the open on Monday, and it's probably up 20% by the end of the week. And then it just absolutely took off. Again, they don't all have to be massive, massive winners. Some of them can just be nice little income trades. And especially if you do this enough, you could do pretty well. So here's another example. And I also like to show this example. Just again, I'm trying to give you different looks. I'm trying to make sure that you're comfortable visually. You can see this pattern pop up. This is a monster move. That's what I call a steady Freddy. And a steady Freddy is just kind of a 45-degree angle, rode that 10-week moving average all the way up. All right, I pulled back a little bit and then went up and then it pulled back deeper. But it's funny. It just went from approximately $100 per share to $350 per share. The deepest pullback was actually pretty minor. It's probably this 15% pullback. But on the deepest pullback of this whole move, right at that swing low point, look at that. You got that reversal pattern. You enter at the open. You got a little squabbly right out the gates, but then it just settled down and absolutely took off. So it was a nice trade. And surely it sure would have been nice. You can see the reversal down here. Look at that right at the bottom of the chart. This is a reversal pattern right here. Undercut the previous 3 weeks. There's that huge volume spike, so huge. And then it just, it did its thing. Okay. So again, I like to show you different looks just so you can get comfortable, train the eyes. Now, here's some money management rules. And I'm going to tell you, I think this is equally important to the setup itself because you can have a good system for what stocks to buy. But if you're discretionary on your when to get in, when to get out, that's not a good recipe because a lot of times you're going to make the wrong decisions. And so I have a nice set of rules that these really have stood the test of time. When I implemented these rules versus my discretionary exits, let's just say the rules did a lot better because they take the human error. They took the human emotions out of the equations. We're just going to automate this whole thing. So here we go. We're entering, this is an end of week pattern. So the pattern has to close at the end of the week. We're going to enter at the open on Monday. Just buy at the open price. I'm not going to, place limit orders and all that stuff. You're just going to buy at the open. I'm going to sell half at 8%. Okay. That's going to be my target one. So if I buy Apple at 100, I'm going to sell half of my shares at 108. Now, once that target one is hit of 108, and I got a stop loss at 90, 10% stop loss, I'm going to raise that stop loss on the remaining shares to break even. And I'm going to let the rest run until it breaks the 50-day moving average. So you hit 108, you sell half, you raise your stop to break even, and you let the rest run until it breaks the 50-day simple moving average. Okay. Some of them want to continue to run. Who am I to get in their way? I like it when stocks want to continue to run. The longer, the better. That means they're making me money. So I'm going to book some quick profits just in case it, doesn't work out, in case it rolls back over and hits my break even. Then I would net 4% on the trade, right? Sell half at 0, sell half at 8. That's average of 4%. Or I could sell half at 8 and I could sell the other half at 30%. All right. Then you have a different number. Okay. So then you have a 19% average if I'm doing that off the top of my head, or a 19% trade. So it's worked out really well. So can you do this? I just showed you a lot, right? I should ask, can you see yourself doing this? I know you're capable of doing this. And honestly, my biggest transformation as a trade coach was we're just really making this strategy simple enough. And the average person or trader or even beginner would actually be able to take these rules and replicate these steps week in, week out. I know it's simple, but it works. And my students and my family members, they repeat these steps. They're all going to retire significantly better than they were before. And I really want that for you. Now, I get it. Everybody wants to hit home runs, but if you can't keep your eye on the ball, nothing's going out of the park. It's just that simple. So if you can commit 20 minutes per week to this process, you can completely change your retirement. And you will very likely make the lives of your family more comfortable as well. But you have to commit to that 20 minutes per week. You have to commit to doing the work. Okay. So the interesting thing about this setup is you can easily do these you can easily set up, use this pattern on the major indices as well. This is not just an individual stock setup. It has universal application. So look at this. This is, everybody remembers this, March of 2020, right? It wasn't fun. We had systems that moved to cash. Look at what happened at the absolute bottom. Look at this reversal pattern right here. All right, you had 4 weeks of hell, let's just be honest. And then all of a sudden you get that bottoming pattern. You get that reversal pattern. You buy at the open on Monday, and it was the rest of the year was absolutely huge. I love this case study. And I want to talk about this for a second. I want to talk about why rules are so important. How many of you, when the market started rallying, you were just waiting for the market to roll back over? You were just waiting for that second leg. Okay. And I'm going to be honest with you. I was too, but I had rules, and the rules kept me in. The rules kept me in until it peaked August 31st and before it started to correct a little bit. But this is why this is the greatest case study in the last 20 years and why the case for rules. The NASDAQ had its greatest rally it has had since 1999, and it was in the middle of a COVID recession. The NASDAQ was just hitting all-time highs and all-time highs, just rallying and running. We made a ton of money off growth stocks. And honestly, if you would have looked at the news, we shouldn't have been. But there is always a difference between what's on the news and what's on the chart. I trade what's on the chart because it's made me more money. The guys on TV, they're wrong most of the time. Okay, so this is a 2018 bear market. Now, we didn't have a reversal on the S&P 500, but we did on the NASDAQ 100. So look, at the absolute bottom right here, absolute bottom, again, doesn't have to be bigger than the previous week. Just got to be above average. All right, you enter at the open on Monday. It's just a nice tool to tell you when to get in. And it just absolutely took off. Oh, the market started to break down. Look right here, you got that reversal right there. All right, that just sends you on your happy way. So, and it was a really nice 2019. Now, there was actually not a reversal at the bottom in 2009, March 9, 2009. There was not one, but there was a reversal at the absolute end of the 2.5-year bear market in the NASDAQ. Look at that. The NASDAQ was down 75%. That is just awful, absolutely awful. And a lot of people lost a lot of money. But look, at the absolute bottom, you got that reversal pattern. And it shot off the bottom, and then it lost its footing for a little bit. But look, and then this reversal pattern right here at the low of this pullback, there was another reversal pattern. And then the NASDAQ just went gangbusters. Look at this rally. Look at this run straight up. It went absolutely straight up. So you can use this as a tool. And this pattern right here has timed the bottom perfectly in all bear markets over the last 20 years, except for one. Okay. So this is the weekly reversal performance. Over the last 5 years, we've identified, 1,267 opportunities over the last 5 years, 74.66% win ratio. The average trade length lasts about 43 days. And honestly, I'm fine with that because the longer it lasts, the more it's making me money. So I'm completely fine with that. Now, what I recommend doing is buying 2 per week, and the average trade, it averages 2.79% over this these number of trades. It's averaged 2.79% per trade. So if you put $10,000 per trade and you do that twice a week, that's $558 per week. Now, maybe you can't do $10,000 per trade. Maybe you can do $5,000 a trade, or maybe you can do $1,000. That really doesn't matter. But, either way you slice and dice it, this system has done well. And I like these odds, right? I like these odds. And now I do want to throw out a disclosure here, just because, over these 1,200 trades, it did incredibly well. I mean, it's no guarantee what it's going to do over the next 5 years. But, we also keep in mind, we've had 2 bear markets in the last 5 years, in 2018 and 2020. And it definitely held up just fine. So you can do very well, but you got to follow the rules. And I think that's so important. So a lot of people ask, do we trade options? And absolutely, we trade options. We have some very, very simple rules of how to take these reversals and trade options with it. Now, what we do though is we book profits on options much quicker, because you got that time decay. And I don't know how long a stock is going to run. So, we might enter the stock and the call option at the absolute same time. And then we're going to book the call option 60, 70% gain. And then I'll just let the stock run, right? Let the stock do whatever he wants to do. It's got no time decay. We're going to book much faster profits on the options. You'll hear me say the word rules-based a lot. You hear that passion in my voice because, I was in retirement planning for years, help people build retirement plans, and now I help people build trade plans. But rules-based systems, I mean, they're designed to take the emotions out of trading, right? They're designed to give you more freedom. That way you don't have to stare at a computer screen all day as if that's going to make the stock move. The smart money uses them because they work. I read something the other day that approximately 75% of the volume on the New York Stock Exchange is automated systems. Now, that's not all just robots. That's really automated systems. These are machines making the decisions for people. And they do that because as humans, we make errors, right? We have fear and greed. A computer does not have fear and greed. It just has rules. It just has inputs. So the smart money uses them because they work. Keep drawdowns limited. Now, as you can see, I'm sure you saw from the picture, I'm not I still have some years to go before retirement. I love what I do, but I'm also consider myself a conservative investor because I like to keep drawdowns limited. And I think that's incredibly important, especially for the people I work with. It's important to protect what you have worked for your whole entire life to build. All right. And I want to help you protect that as well. So in addition, I talk about trading as a business. It really rules-based allows trading to be a money-making business and not just a hobby. And that is so important. That is so important, right? I asked earlier, how many of you actually have a rules-based trade plan? It's kind of like that gut check question. How many of you written down your rules? All right. It is 2022. The market has came under pressure lately. Like, now is a great time to really, work on your trade plan and really set yourself up for success, not just for this year, not just for this next quarter, but for life. Okay. Because rules, these trade plans, it can really help you. Now, here's a couple testimonials just from a couple people that I've worked with. And Scott right here, he said, I sold half at 8%, and he's been rolling the remaining ever since. His option was up 198% on the closed position, 220, and the current open position is still rolling. So tremendous trade. He bought the stocks and the options. Now, Richard said, I dropped 20K on Sunday on a weekly reversal for Sportsman Warehouse. It popped 44% today. Sold it all crazy in 2 days. Love the reversal strategy. Win ratio of 91.1% on all my trades to date since I started 3 months ago. Now, I actually like this one better. And here's why I like this one better. Anyone who says 91.1%, they are tracking. They are tracking every trade. They have a spreadsheet. They have a plan, and they're sticking to it. And that's what I love. That's what I love to see. So I shared with you a lot. I shared with you the rules. I shared with you the money management rules as well. Now, you can take this and absolutely do this yourself. That's no problem. Now, if you want to come work with me on a more advanced level and want to see what that looks like, and here's what I have for you. But I have the weekly income program, and honestly, the weekly income program, it has produced some of my best students that I've ever had the pleasure of working for. And it's been truly a great experience. So right now you might be wondering if this is really going to change your life and improve your retirement that much, enough to make it worth it. Remember, I built retirement plans professionally. I know the fears and desires that really come with retirement because I heard it every day. Now, I built this so you could grow your nest egg no matter how big it is. It doesn't matter, right? We can grow it together, and it's going to make life easier for you and your family. My twin brother and I, we run the Traders Plan, and we answer every email, and I guarantee that we do so. So if you're ready, I'm ready. I'll show you what this looks like if you want to work with me on a more advanced level, and then we'll just go from there, and you can decide if it's for you or not. No big deal. So not only, and I'll talk about what is more in the weekly income system program, but not only will you get the weekly income system program, that comes with real-time alerts. Okay, so every Monday morning, you're going to be delivered 1 or 2 weekly income alerts, prior to the market open. All right, every Monday with very specific targets or stop losses. So for, we're going to give, enter DraftKings at 50, sell half at 54, stop loss at 45. So very, very specific details on what we're getting in, what we're getting out, because I know I want you to train with me. I want you to be able, I want to teach you how to fish, but as I'm teaching you how to fish and as I'm teaching you, where you need to put the pole, what lure you need to use and everything, you're going to see the alerts as well. So you can make sure that you get the same trades as I get. Okay. Now, I don't know where your financial position is, so I'm not going to speculate here, but this is just what's possible. If you take one trade, say you put $10,000 per trade, you take one per week, that's $279 per week on average. Again, this is an average over a lot of trades. Options, we're incredibly conservative. We're really shooting in that 3 to 4% per month range, even though we've exceeded that as of lately. But this is just a nice little add-on income stream. So you trade stocks, you trade options, 349% per week. Again, you might not be quite at that level, and that's totally okay. But you might take 2 trades. You might take 2 trades, stocks plus the options, and that's $628 per week. Again, I don't know. And there's obviously no guarantee that you will make this, but it has done very well and it has stood the test of time. So you have the weekly income system, and I actually want to throw in a bonus system, and that's my Fang momentum system. Now, this is something I'm really proud of that I launched last year, and I personally trade, and it's honestly one of my favorites as well. So the Fang momentum system is, let me go back to this. It really is a momentum style system. It is a pretty fully invested system. So it is a pretty aggressive system. Now, if you were to take in every trade going back, let's start with the buy and hold. If you go back 10 years and you bought and hold the SPY, S&P 500, dividends reinvested, your 100,000 would be worth 450,000. There is nothing wrong with that. As a matter of fact, that's actually pretty good, right? We had a pretty good run. But if you would have taken that same batch of trades or that same time frame, that same amount of money, and if you would have taken every trade in the Fang momentum system, you would have done a lot better. You would have had your 100,000 would be worth 1,485,735, 330% more versus buy and hold. And a lot of times you say, well, okay, well, what's the drawdowns? Well, I can tell you that in March of 2020, this system was down 3.5%, and the SPY was down 12.5% for that calendar month. So and we have bear market filters in case it gets too bad. So it's done very, very well. I mean, it's, $1 million more after 10 years. I'm sure you can do the math on that. So, and this is what the system has done every single calendar year, every single month, going back to 2012. So last year it returned 58.72%. You can see that 9 of the 12 months were profitable. And you can see that out of the last 10 years, we did have 2 losing years, one minus 1%, which there was a bear market this fourth quarter. So that dragged it down. And then 2016 was minus 6.41%. But you can see there's been some very, very robust years. And this is really a portfolio style of system. So you have the weekly income, which is more of a swing trade. That's more of a kind of once or twice per week setup. And this is more of a portfolio style system. So they really complement each other nicely. Now, here was a Fang. Here's was a trade that the Fang Momentum told me to buy. It told me to buy Tesla right here. And, you know, I wasn't sure about it, but hey, rules are rules, and I follow rules. So I was like, the system tells me to take a trade, I take a trade. I had no idea that it was going to go up over 50% in the next month. I mean, I didn't, but the rules told me to rebalance right around here, around 53%. So I rebalanced, sold took partial profits, and then gave it a little bit of room to breathe. And I sold the rest right here. So sold some right here, sold some right here. Average profit was somewhere in the middle. It was a really nice trade. It made my fourth quarter. All right, did very, very nicely, but we're really trading pretty aggressive growth stocks in this system. So everything we talked about, you know, the weekly income trading system plus alerts, the Fang momentum system plus alerts. So you got two 100% rules-based systems. Now, every Tuesday morning, I want to throw in a bonus. Every Tuesday morning, I really put up my swing trade setups, my video blueprints. So this is really my watch list. These are my top 5 ideas of the week. So maybe you want to put some more money to work, or maybe you want to take some more aggressive trades. But, you know, this was a snapshot of an email I actually sent right before Riot took off at the end of 2020. You can see right here that I said it is a beautiful cup with handle pattern with the potential buy above $4. The very next day, it broke out of this cup with handle pattern right here, and we bought. Did I know it was going to go from $4 to $76? I had not a clue, you know, and sometimes you just get a little lucky, but hey, that's what happens. If you follow the rules and you take enough trades, those kinds of trades are just going to come across. And here was another one, the TKAT. Just a simple, very, very aggressive shot up, pulled back support. We bought at support. It was up like 50% in a couple of days or 4 days, you know, booked some profits on that. So, and again, they don't always turn out to be the riots. I think you know that, but we're going after more aggressive trades. The first 20 members do get option income alerts. So we do have, I have an options trader that works for me. And by the way, he booked 3. He's been buying a lot of puts lately and spreads, and they've done very well. He booked 3 winners today. He booked another winner yesterday. So he's 4 for 4 this week, and it's been a pretty rough week. So, and I like having him around because for one, he's very talented, but for two, when you have a bull market system, but you have an options trader that can go bearish, they balance out each other nicely. Okay. Very, very nicely. But, you know, I'll also say that on the reversal pattern, you know, we talked about the charts, like you have to be ready. And I kind of want to go back. Well, I'll go back to that in a minute, but you really have to be ready for when you get that reversal candle. We literally could be just a few days away. We could get that reversal this week and then be ready to pounce on the following week. So, you know, I always tell people, don't get too bearish or don't get too bullish. Don't get too either way. We're 1 or 2 days away from a buy signal. All right. And I just, it's important for me to say that because so many people, they get a little, you know, they get a little upset when the market goes down, but hey, there's one thing I've learned. And even if I were to go back to the March of 2020 chart, strong trends come out of ugly markets. And I think that's the most important lesson. If you get an ugly market and then you get a reversal, odds are in your favor that good times are to come. So you got to make sure that you have your loaded rifle so you can really do well on that trade. So, you know, everything we talked about, system number 1, system number 2, kind of my top 5 of the week I put out Tuesday morning. Option income alerts. I do have to limit this to the first 20 because I have to pay my options trader. It's just really that simple. Now we have custom scan codes. Now this is part of the weekly income program. I'm going to make it super easy for you where you just press a button and all those opportunities are right in front of you. Scans the entire market for a very, very strict scan criteria. I have scan codes for stock charts, wealth charts, Thinkorswim. I have scan codes for all these platforms. And by the way, you could easily adjust the scan code to be a daily scan code. It has universal application. So, and you can see right here, this is just me pressing the button on a stockcharts.com scan code. I mean, there's plenty of weekly opportunities. You should get anywhere from 5 to 20 plus. Some weeks you get a lot more, some weeks you get a lot less. It just really depends on the overall market. So I launched this fast track weekly income workshop last year, and I've had a lot of success with it. And, the goal of this is to really just give you a little bit of extra hand holding. The goal of it is to get you from newbie to mastery in 30 days. And my next live workshop is going to be next week, February 1st through the 2nd. I like to keep these classes very, very small. I'm going to show you how to set up the charts, set up your scanners, and you have the ability to ask me as many questions as you want. Now, I do have 20 members only for this too, because I got to keep the classes small because I want you to be comfortable asking questions. But I did add this unlimited attendances for life as long as you're a member. So that means if you can't make this one, or if you just, and I usually put on one a month, if you just want to take one a month, that's totally cool. You have that ability. So everything we talked about, system number 1 plus alerts, system number, the Fang momentum plus alerts, you got the swing trade setups blueprints, you got the option income alerts, the fast track workshop, the scan codes. If all this did was just add an additional $279 per week income, would that be worth it? Let's just take in one trade. Let's just be conservative here for a second. What if it financed a few trips on your bucket list each year? Would that be worth it? I like to travel. What if it allowed you to retire more comfortably than you and your family thought possible? Would that be worth it? The entire weekly income system, everything we talked about is $997. All right, you get access to everything, all systems, all plans, and even the options income. And I am doing that live workshop, which I honestly sell that separately for $497. I sell that separately for $497. I'm going to add that as a bonus for free for you if this is something you want to take advantage of. I always try to do something for Dave's members. You can go to the traders plan, plan.thetradersplan.com/checkout-NTS. Okay, so again, that's plan.thetradersplan.com/checkout-NTS. Yeah, I understand that, and I wanted to throw this out here. I wanted to throw a buy 1 year, get 1 year free. I understand that it's been a little scary so far this year, and there's plenty to look at on the news. I get that, even though if you work with me, I'm going to teach you not to trade the news. But there is that objection, right? What's going to happen if I buy this, 1 year? So I like to throw a second year on here. That way, that $997, that doesn't cover you just for the next 12 months. That covers you for the next 24 months. That way, you're completely covered. You have plenty of time to really, really get the maximize, get the most out of this. Right? Buy 1 year, get 1 year free. You can go to this order form right here, and that's a huge value, guys. It's just buy 1 year, get 1 year free. So, in light of everything that's going on, I like to offer a 2-part guarantee. Trade it for 30 days. And if it is not for you, just request a full refund. You must prove you've taken at least 1 trade. Okay, so you got to send me a screenshot. No buying this and putting it on your shelf. Show me you've done a little bit of work. But if you show me you've done a little bit of work and you just send me an email and say it's not for you, here's my trade. No harm, no foul, right? Shake hands and be friends. But I understand most people don't want their money back, right? They want to be successful. They want to really break out as a trader. So here's what I got for you. If you haven't made $3,000 or tripled your subscription investment, I should say subscription investment of $997 in 90 days, I will personally mentor you one-on-one until you do. That means in 90 days, if you haven't tripled your $997 investment to $3,000, you send me an email. We're going to hop on Zoom, phone, whatever we need to do, look at your trades, see what needs to be fixed. Sometimes the smallest tweaks can move mountains. All right. So here is everything, again, that's covered. And I do have a few minutes for Q&A if anyone has any questions, but you got the order form right here. That's a secure order form. I also, on that order form, I have a phone number and my personal email address. So if you go to that order form, you can check that out. And maybe you got a question that I can't get to on this presentation. You can give me a call or shoot me an email, and I'd be glad to respond it, let you know whether, if I can help you in any way that I can. So everything we talked about, you have 2 trading systems that complement each other nicely. You got my top 5 of the week. You got options income alert. We're 4 for 4 this week when the market's been pretty rough. It's because we flipped and went bearish. you have that fast track workshop, right? And that's starting February 1st through 2nd. And if you can't make that, I'll just send you a link to another one. That's not a problem. And the custom scan code. So it's pretty huge value, guys. I've done really well with a lot of the students that I've gotten from David. So I can open it up. That's really the end. I can open it up. If anybody has any questions. So I see a question that I actually get often. Could this be implemented in Forex? Maybe. I've never tested Forex, to be honest with you. So I could not validate its effectiveness on Forex. Are the scan codes available on Thinkorswim? Yes, they are. 100%. All you got to do is send me an email and I will send you the scan codes for Thinkorswim. That's easy. So, oh yeah, so that's a great question. Rick asked, do you have any rules to keep you out of Monday morning like what we just had? Yes, absolutely. I actually did not alert a trade this Monday, and thank God I didn't. So I have a rule. When the S&P 500 is under the 200-day moving average, I really lighten up. Okay, so I will buy until I have bear market filters on everything. With the weekly income system, if the market is under the 200-day moving average, I'm really lightening up. And I just decided to pass this week. And I'm glad that was a wise choice, because they probably already would have been losers. But yes, I don't send alerts just for the fact of sending alerts. There are times when the odds are in your favor, and there are times when the odds are not in your favor. And I have tested this. When the S&P 500 is under the 200-day moving average, the odds are not in your favor. Doesn't mean we won't take a trade here and there. But if we do take a trade, I recommend half position sizes, right? Because you have to understand where you're at. Any other questions? That was a great question. Thanks, Rick. So we got Forex, get that. Hey, David, I think I'm good. And again, you can go to this order form right here, and it is in the chat box. My contact information is on there. I'd be happy to have a conversation if needed, or I'd be happy to, you can just shoot me an email. So I appreciate it. I wish everybody a blessed evening, and I look forward to seeing you on the inside.